ETFs explained. I'm going to tell you exactly what an ETF is in this video and some of the better ETFs also that are on the market, because not every single ETF is created equal by any stretch of the imagination. Every single ETF that is on the market is different in its own way in terms of what they're invested in, what their portfolio, I should say, consists of. And so I want to start with the basics, though. Okay, some like really what it stands for if you're completely new to ETFs. ETF stands for Exchange Traded Funds, which is a type of investment fund that is traded on stock exchanges. Much like stocks, ETFs consist of a collection of assets, like a total portfolio, like the S&P 500. It has, on the S&P 500, there's 500 companies. Okay. And in fact, you can actually invest in the S&P 500 basically with an ETF like VOO, which is owned by Vanguard. So the key characteristics of ETFs: diversification, like we were talking about. ETFs can typically contain a wide variety of assets. If you love, let's just say, technology stocks like Nvidia or Apple, VGT might be for you. That is a huge ETF, and one of, I believe they actually have consistently outperformed the S&P 500 of recent keywords there. Now, also, the S&P 500 is another one that you can kind of invest in if you wanted to invest in VOO, where you invest in the top 500 companies. VGT, however, is another one where you're basically invested in a collection of, companies that are really downgraded to, like, not downgraded, but that's a bad word. They're kind of, graded to, like, I don't know, like semiconductor stocks and things of that nature. Like, again, Nvidia, Apple, Microsoft, I believe. Liquidity. ETFs are bought and sold on the stock exchange throughout the day, just like individual stocks, okay? Lower costs. ETFs generally have lower fees than actively managed mutual funds. So that's very important to mention, okay? Those fees. So since most ETFs track an index passive management, they don't require team managers to pick stocks, keeping management costs very low. All right? That's huge. Transparency. Most ETFs disclose their holdings daily, meaning you can see exactly which assets the fund is invested at any given time. It's all there. If you go on, another big ETF that we talk about on this channel, like all the time at nausea, is SCHD. Now, SCHD, there's also an SGHG too, which we just discussed in the last video I just did, but at least recording that video. But you could check that out as well. I mean, you could check out a zillion freaking ETFs videos on this channel. I have a zillion of them. SCHD is an ETF where they're invested in a lot of companies that pay dividends, which they pass on to you. So if you were going to invest in SCHD, then that could be a really good one if you're going for the dividend in your portfolio. Now, I mean, I kind of want to be careful how I say this. It's less risk than, how about this? It's less risk than just picking one particular stock, like from the S&P 500. If it just, because the S&P 500 can just, one of the companies, I should say, from the S&P 500, like Micron or something. Micron's a bad example, but you know where I'm going with this. Could just collapse. Okay. There could be a potential there for that. I'm not saying it will. I'm just saying potentially it could. Now, if you're going to invest in, like the VOO is a great example. VOO, you are invested in the top 500 companies. So if Micron, let's just say, collapsed in the S&P 500, then you're invested in the top 500 companies anyway. So you're invested in Home Depot, and you're invested in Tesla, or whatever stock is on the S&P 500. Apple, Microsoft, you can just go through a laundry list of companies that are on that, on the S&P 500. And with ETFs, then you are invested in the S&P 500 essentially, or you're invested in a bunch of huge tech stocks. It really just depends on which ones you're going for. So how ETFs work. Index tracking. Many ETFs track the performance of an index, again, like an S&P 500, NASDAQ 100, etc. The ETF buys and holds the same assets that are included in the index. When the index rises or falls, the ETF's value generally rises or falls in tandem. Okay? So ETFs are also volatile. I don't want to say that ETFs aren't volatile. They are volatile, depending on the market. If the market is bad, if it's a bear market, then you're probably going to see some losses in an ETF if you're going to invest as today as a recording this video. If there's all of a sudden there's a bear market, or not all of a sudden, but if there's a gradual decline or something, it's volatile. What can I say? But it could also go up in value if it's a bullish market, obviously. So types of ETFs. Stock ETFs. These ETFs invest in individual stocks or an index of stocks. For example, an ETF might track the S&P 500, which includes 500 of the largest companies, as we mentioned. Bond ETFs. These invest in bonds, government bonds, corporate bonds, municipal bonds. Bond ETFs allow investors to gain exposure to a diversified set of bonds, providing regular income. Okay, so obviously, the next video I'm also going to produce too is kind of talking about the best ETFs, like which ones are the best ETFs for investors in 2025 and potentially beyond. We have, like I said, on the list, we have VOO, we have SCHD potentially, depending on, again, this is all depending on the market. VGT. I mean, there are a bunch of ETFs that you could choose from. Now, I also talked about JEPQ as well as QQQ a bunch of times on this channel as well. This is more for people who are, they're kind of new to ETFs. And I know I'm speaking a lot in terms of very basic information in terms of all of these ETFs. Like, I'm sure if you're a seasoned investor, then you probably know some of the information that I'm talking about right now. But this is kind of for beginners, obviously. There's also international ETFs, inverse and leverage ETFs. So inverse and leverage, like these are more specified ETFs designed to amplify returns leveraged or to profit from a decline in assets value. However, these can be a lot riskier and are typically used by more experienced investors. Some of the advantages of ETFs, like low cost, flexibility, diversification, like I was saying, dividends potentially. Obviously, there are ETFs that talk about more, what do you call it? Sorry, I just got a text that kind of got sidetracked here. I'm gonna have to end the video in a second. But trading costs, obviously disadvantages of ETFs. Let's just get through this really quick. Trading costs, market risk, tracking errors, etc. But I'm not gonna go really into the advantages or the disadvantages of ETFs. I'm gonna talk about that in a completely different video because I kind of have to end this right now. So thank you. Kind of have an emergency. Thank you so much for watching, everybody, and hopefully I will see you in the next one.